Welcome back. You're watching Cracker Stocks right here on ET Now, and this is a Diwali special episode. With me is Ankita Saxena. Very good afternoon to you, Ankita.
Good afternoon.
And remember, viewers, this is a show where we get you the right stock picks coming in from our experts. We have divided it into three categories. One is safe sparklers with steady, reliable picks for consistent low-risk growth. You also have the high-risk rockets, which are stocks with strong growth potential for bold investors. And lastly, value-driven mines. For them, we have value bombs. And we have our experts also joining us this afternoon, right, Ankita?
Absolutely. So why wait? Let's get started. Our first category is safe sparklers. The first, coming to you, Naresh, then tell us what are you seeing as a safe bet or a safe sparkler for this Diwali?
So that would be first a buy on State Bank of India. The stock has continued to do well over the last couple of years, and after that move to 800 to 900 levels, last 6 to 8 months has been a consolidation, base formation around that 740 to 770 mark. Yesterday, the stock also started moving up, but overall, the structural view is we could consolidate and then again go higher. So it's an accumulated current level with a stop loss below 770 and a target price of 1000 plus. Second is Reliance Industries. Now, this is a stock which has corrected a good 15-18% from the top, back to the same price where it was a year back. And the returns now don't look great over the last 3-4 years. If you remove out Geofinance, the returns have been nowhere. So overall, a good entry point for the long term. I would expect it to eventually go up to 1600, 1700 levels. Stop loss to be kept at 1250.
All right. Good afternoon to you, Naresh. Good afternoon, Akshay, as well as Gurmeet. Also, festive greetings to all three of you and all of your colleagues and all at home. Gurmeet, let me come to you. And there are specific sectors that you have actually spotted, and you believe that they are long-term bets that one can take, and they are safe pockets that one can look at investing if they are looking at fundamental investing in the longer term. One of the sectors that you've spoken about, energy transition, and actually that has to be the talk of the town at this point in time, because everybody is talking about energy transition, and we've seen those companies in the counters linked to that actually perform pretty well. So in this space, A, why do you like this space? Why do you think this is a theme for the longer term, a safe bet for the long term? And which stock among in that category do you like?
So, very, very strong structural trend in energy as we spoke earlier also. If you see the NEP plan, which is the National Electricity Plan, lays out the guidelines till 2032. So the power generation, the peak power demand is likely to almost get close to 500 gigawatt. So the generation demand would be in healthy double digit. The transmission infrastructure, if you see, is upwards of 4.5 lakh crores. Now, if you break the transmission infrastructure into 3-4 categories, the first would be the grid lines. So, currently, it's likely to double. It's measured in circuit kilometers. So, Power Grid here holds almost more than 50% market share. And, they have a clear order pipeline visible for next few years. Dominance, government stake is around 51%. So, there can't be near-term supply pressure. Then there are, substations. The number of substations are likely to double in next 6-7 years. Then you have something like HVDC. HVDC is a technology which is used to, transmit high amounts of electricity over long distance. That's also likely to double. So if you map the value chain in energy, you will get somebody like an NTPC in power generation, which is currently at about 76, 77 gigawatts. They have plans to go up to 130, 140 gigawatts. Thermal, they are adding 26 gigawatts, 4 they added this year, and around 21 is in pipeline. Renewable energy, they are already, the NTPC Green IPO is now due. It should come in November, middle of November. They're already in the renewable portfolio, they are again talking of 60 gigawatts. They're currently just about 4-5. So strong growth expected there. Already doing a decent EBIT and return ratios have picked up. And in the thermal portfolio, the benefit they are getting is that because of the peak deficit in solar hours, the PLF goes up. And since they work on a cost plus pricing basis, the revenue as well as the earnings are also pretty steady. So I like the complete power value chain. You can have somebody like an NTPC, Tata Power in terms of generation and being vertically integrated. You can have Power Grid in terms of transmission, and you can have a lot of companies in transformers, rectifiers, substations, which are across the value chain.
Absolutely, Gurmeet. In fact, India's goal to expand its energy renewable capacity by 500 gigawatts by 2030 augurs well for all these energy companies. And of course, NTPC Green is coming out with its IPO, and that's something that we all are watching out for. But coming to you now, Akshay, tell us what are your safe bets for this Diwali?
Good afternoon to you and season's greetings to ET Now team. The first pick is DLF. If you look at the longer term charts, the monthly charts are in a healthy uptrend. It's just that the last 6 to 7 months has been in a sideways time correction. My belief is that eventually this time correction should fade out and we should see a breakout happening soon in DLF. So I'm recommending to buy DLF at the current rates for targets of 967 and 1010. The stop loss will be 752 on this long-term trading bet. The second trade is Kotak Mahindra Bank, a more or less similar price structure, just that the consolidation has been too far and too much extended. If you look at the price chart, it's been almost 4 or 5 years that the stock has been consolidating in a sideways price range. And time and again, we are seeing bounce back from the levels of 1550 to 1600 zone. Recommendation is to buy Kotak Bank from a long-term perspective, extremely positive on the charts and targeting 2275 to 2300 in the long term with a stop loss of 1497.
So that is the safe sparkler coming in for Akshay at this point in time. Coming back to you, Gurmeet, let's talk about the new age tech space. You've picked that one also as a sector that one can look at in the long term. And I'm sure as most of us are consumers also of those products, we also believe that the theme may actually run going ahead. But what are the key fundamental points that you are actually seeing and that is making you positive on this entire space, and also which are your topics?
So, what we have seen is, and there's this retail saying, business is where the consumer is. And if you see our screen time today, which is, let's say, combination of connected devices, our phones and all, is now upwards of 6, 7 hours. So that's almost one third of your day. And if you remove sleeping hours, that's 50% of your day. So, and if you see India follows US with a lag. So about 15 years back, the main index in US, S&P, had 30% weightage to financials. Today, India has 30% weightage plus to financials. And now, if you see the digital portfolio, their online consumption went up from 5 to 30%. And we saw at least 6 companies in $1 trillion club in US. India also, the digital portfolio weightage in Nifty will go up, because that's how the consumption is happening. So we like Zomato. I think it's stabilized now. The food delivery last year, they did almost 6.5 lakh crore orders. That's quite a number. So the food delivery business will continue to grow at 25-30%. Blinkit is doing very well. Yesterday I was trying to do some stuff on Dhanteras. Everything was sold out. From Blinkit to Zepto to Swiggy, Instamart. So it's becoming part of our schedule, and as contribution margins pick up, as they move up the value chain, this will further add more. In fact, now if you take the sum of part basis, maybe Blinkit has more value. If you, let's say, take 250 as a base for Zomato, they have plans to have 2,000 plus dark stores by 2026. And that's where you're seeing aggressive fundraise happening by Zepto, by Zomato, as well as Swiggy IPO due. So this space looks very, very exciting to me. And look at this way, our total quick commerce market last year was $3.5 billion. I think Blinkit alone will be $3.5 billion by next year. So this is going to grow at 50-60%. We will also like something like a Policy Bazaar, which is a marketplace for insurance, third-party products, and lending products. If you see, very asset-light business, high on margin. So we like some of these new age businesses. We'll try and maybe, nibble into a couple of more and make a more digital portfolio as part of a core portfolio.
Absolutely, Gurmeet. A couple of news flows coming in for Zomato, whether it is the fundraise or the addition of dark stores. And of course, Zomato has also increased the platform fee for this festive period to ₹10 from earlier 7
and
rupees.
the point being, Ankita, is that all of us don't even mind spending that because you don't want to step out of the house.
That is also true, but that augurs very well for Zomato because it is margin accretive. At least ₹1 is accretive for at least 20 to 25 basis points. Yes. So that is a big coming in for Zomato. But with that, it's time for us to slip into a short break. Don't go anywhere, because after the break, we're getting you all the high risk rockets that are ready to fly off.
Welcome back. You're watching Cracker Stocks right here on ET Now. We are done with the safe sparklers. We've got the picks coming in from our experts on that particular front. But let me go across to you, Naresh, and ask you what's your high risk rocket bet for our viewers right now?
So first would be a buy on Aditya Birla Fashion Retail. The stock has gone through a long period of underperformance in the sector. The stock used to be 250 back in 2016, 280 back in 2019-20. And even in 2022, the stock came back to 250, 280, struggled, then went to 360, again went back to 200, and now we are back to 300 after testing that 360 level. So there has been multiple attempts to change tracks. So eventually I would expect this to break into new all-time highs and do really well if this works out. So at current levels, it's a good entry point, good 15-20% off the top. Would be an accumulated at current levels with a stop loss at 280, target price of 400, 450. Second would be a buy on Hindalco, which is a case for a stock which continues to outperform on a longer term basis, plus the fact that aluminium prices continue to hold above the 2600 mark makes it a positive correlation. So out here, I would expect an eventual move towards 850 odd levels, stop loss to be kept at 650.
Right, Naresh, those are the picks by Naresh. But let's go across to Akshay and see what are his high risk rocket picks. Tell us, Akshay, where do you see this? Where do you see these rockets flying off to?
Possible breakout stocks which may just rocket your investments in a very short span of time. So the first stock on my radar here would be Bank of Baroda. I'll start with Nalco. Nalco has a good technical setup, and if you look at the last 7-8 days of trading session, it is consolidating in a range and just setting up for that strong price breakout. The broader charts are very strong, and going by the price setup, my belief is that if you hold a stock from a longer term perspective, they should soon rocket for targets of around 305 to 342 with a stop loss of 177. The second trade is in Bank of Baroda, a PSU where has been holding strong in the recent choppy session which the banking pack has. And out of the PSU space, this stock has a very strong technical setup. A strong base is done at 230, and now it's just about the momentum getting back in the stock once it breaks past 260. So I'm expecting the breakout to happen soon. Targets on the positional front should work out till 290 and 325. You can keep a stop loss of 221 as a risk management on this trade.
Just a quick recap of all the picks coming in from our experts then. If you talk about safe sparklers, for Naresh, it's SBI and Reliance Industries. For Akshay, it's been DLF and Kotak Mahindra Bank. Talking about the high-risk rockets for Naresh, it is ABFRL and Hindalco. For Akshay, it is Nalco and Bank of Baroda. While you have Gurmeet, who is positive on the entire power transmission companies, as well as who's positive on the entire new age tech. But there is another space that you are also bullish on, Gurmeet, and that is the financials. Have you picked financials as a long-term bet? Because this is one sector that you cannot sort of ignore. And as like a very inquisitive viewer myself, I would also want to understand, because financials, while we all place the bet that there would be a recovery in the financials in the very near term or short, or at least in the medium term, that's not the way how it has been transpired. That's not the way how it's transpired.
I think it's due. Same thing was said for IT, 2-3 quarters back, that AI will eat up everything, and IT services company will be under pressure. So, but I think we are at the beginning of the rate cut cycle. Globally, rate cuts have started. I think India will follow through in a couple of months. That will bring down the cost of funds, and what the pressure which has been on NIMs will get reduced. But you got to be a little more selective here. In fact, if you see the entire bank Nifty, you will get it at 15 times, right, which is much lesser than what you're getting Nifty at. And most of the good banks are less than what they've been average trading on a price to book basis. So if you see, for example, HDFC Bank hasn't done anything literally for 3 years, trades at what 2.3, 2.4 times. You have somebody like an SBI which is on book one book. You have some of the PSU banks which are below book like Bank of Baroda. And then you have the new leader, which is ICICI Bank, which continues to deliver, a POP on a very quarter-on-quarter basis. So one part of financial is banks. So, we like ICICI, we like Federal Bank, the change of leadership now, Mr. Manian coming. And one weak point for Federal Bank has been its liability side. And now they're really working on granular liability in terms of building up CASA, getting more NR deposits. And the bank has done well post his announcement as, as the leader of the bank. And then you have non-financials, which are capital market plays, which we like. So you have depositories like CDSL. We've been opening 1 lakh demat accounts now on a daily basis since COVID. The number of demat accounts have now crossed 18 crores. And I think this number will continue to grow. Then you have asset management companies, which are extremely asset light and done very, very well. You have RTAs like CAMS, etc., which are basically, do the back, register and transfer agents for mutual fund. CAMS, for example, has 68% market share there. So we like this space as well. And now I think maybe with the lag, some of the NBFCs which have been out of favor, some of the better ones may make a bit of a comeback. It's been a very sad 2 years for leading NBFCs. So once cost of funds come down, because they are more dependent on wholesale deposits, that will start getting reflected, on their numbers as well.
The entire financial space, ICICI Bank, Federal Bank is what you prefer when you talk about financials, as in the banking, and also you have CAMS and CDSL also among the other counters and select NBFCs. But I want to come back to you, Gurmeet. I wanted to understand. So since you said banks will do well, and when I see your preferred picks, they are mostly from the private sector banks. So what about PSU banks? I wanted to understand where your tilt is. But the fact that you've spoken about ICICI Bank and Federal Bank, should we actually take it for but obvious that you prefer private versus PSUs?
Overweight there, but like SBI, it's part of our core portfolio. It's been there for a while, as I said, and I think they'll have very good treasury gains. I think YONO is doing a fantastic job. More than a third accounts are getting onboarded digitally. 80% of the unsecured lending is happening digitally. At some point of time, they will think of some value unlocking in YONO. And I think at 17-18% ROE is one of the best PSUs in play. And as I said, around one book value on a consolidated basis, of course, including subsidiaries. We also tactically like Bank of Baroda. Great quarter. First quarter was a bit subdued, but I think Q2 was very, very good. We saw some decent growth both in deposits as well as CASA. The NIM seems to have now bottomed out. Slippages were controlled, and trades at 0.7, 0.8 book. So my sense is that maybe Bank of Baroda tactically and SBI in the core portfolio.
All right, so those were the picks by Gurmeet. But let's get on to the next leg of the show then. Of course, the value bombs now, a space where which has been undervalued, and perhaps the stocks are likely to give better results going ahead. For that, let's quickly go across to Naresh first. Coming to you, Naresh, tell us where do you see value? What are your value bombs?
So two small cap names. First is a buy on Maharashtra Seamless. The stock has corrected from a high of 1100 all the way down to sub 600 levels. Good enough correction. The sector is still doing well and turning around for this company. Rest of the names have continued to be in an uptrend. So out here, a good entry point with a longer term view. Stop loss to be kept at 540, a minimum target price of 850. Second is a buy on DCB Bank, one of the small cap banks, which has gone through a very long phase of consolidation with hardly any returns. The stock used to be closer to these prices back in 2008 also, as well as in 2015. And over the last 2 years also has made a base around this 100, 110 levels. And looks like finally a trend change is about to happen in the stock post the recent numbers. A stop loss at 110, a target price of 140 to 160.
All right, so those are the value bombs coming in from Naresh. Akshay, over to you. What are your value bombs and where do you see some value lying if someone has to bet right now?
The first pick is JSW Infra. Well, my belief is that one round of corrective price action has been done in the stock. Broadly, on the longer term price chart, the trend is absolutely strong. In fact, the last week's losses have been covered pretty fast in this last few trading sessions, and the belief is that the price setup is extremely strong, and that just makes me believe that the stock is heading for upside targets of 387 to 432 in the long term. Stop loss would be 272 on this trade. The second is Cyient Limited. Cyient is trading at 1824. It has been in a sideways price structure since the last couple of months, but the longer term chart still makes me believe that an initial round of correction has just faded off in the last 3-4 months, and now it's time that the stock should start reversing soon on the upside and the momentum should regain. So would recommend to buy Cyient at the current prices for a target of 2325. Second target can be 2418. The stop loss will be 1497 on this long trade.
All right, so that is Akshay's pick coming in for value bombs. And lastly, let me come to you actually once again, Gurmeet, and I believe you also like Bharti Airtel. And why is that? Is it because of the telecoms theme or digital theme or the multiple things that the company is doing at this point in time?
Multiple things actually, and there has been now consolidation. So I think the tariffs ARPUs are moving up. Bharti actually had a 233 ARPU. So the mobility business continues to do well. In fact, they grew 8% quarter on quarter. The Africa business was stable, which is around 24% of the business. And Airtel Broadband seems to be doing very well. I think this could be the next growth lever. We just have 2 crore houses in India which have Wi-Fi at home, and the number of eligible homes are around 22, 23 crores. So you probably need a recharge or a geo movement here, because right now the average monthly tariffs for Wi-Fi are on the higher side, it's 1,200 to 1,500. But that can be brought down on a recharge or a prepaid basis. This could lead to that. Plus, they are generating cash flows now, which is positive for debt reduction over the long run. The capex is now pretty controlled, and they are probably would be generating 25,000 crores of free cash flows year after year. And now they're restructuring the business. So they want to have different focus on the digital and connected entertainment portfolio and a very different focus to the DTH and the broadband portfolio. So they're doing that restructuring for 1st of April. And I think tariffs are going to now gradually keep inching up. There is some pricing discipline coming because of 2 strong players now. And also for Vodafone to survive, you need more ARPUs. You need tariffs to go up. Otherwise, we are again staring at a 2-player industry, which maybe the regulator may not want. So play on digital as well as strong cash flows. Very solid counter in my view with a medium to long.
On that note, Gurmeet, Akshay and Naresh, all three of you, thank you so much for taking the time out and joining us and for giving all your Diwali picks. But with that, it's time for us to slip into a short break. You don't go anywhere, we'll be right back.
If you like this video, then like, share and subscribe to ET Now.